Hey everyone, welcome back to the channel. The crypto market is buzzing again, and a lot is happening. Bitcoin is holding strong above 115,000. Ethereum is pushing toward 4,500. And altcoins? They're showing serious signs of life. In this video, we'll break down what's driving the market right now, what short-term opportunities are out there, and what risks you need to watch if you're trading. So let's dive in. Let's start with Bitcoin. Right now it's trading above 115,000. The trend is still bullish, but momentum has cooled a little. The key zone everyone's watching is between 114,000 and 116,000. If Bitcoin breaks cleanly above 116,000 with strong volume, we could see the rally extend. But if it struggles at that level, don't be surprised by a pullback. For short-term traders, this is a classic breakout or fake-out setup. The smart move here is to wait for confirmation. If the breakout happens with solid volume, it's worth a shot. If volume is weak, stay cautious. And whatever you do, keep those stop losses tight. Now let's talk Ethereum. Ethereum is trading close to 4,500. It's moving up, but it hasn't been as strong as Bitcoin lately. That's actually interesting because if Bitcoin pauses or consolidates, Ethereum could be the one to play catch-up. Short-term support for Ethereum is around $4,300 with resistance at $4,600. So those are the levels to watch. A clean break above $4,600 could unlock more upside. And if that happens, a lot of DeFi and Layer 2 tokens might follow along with it. So keep Ethereum on your radar. It could surprise us. All right, let's get into altcoins. Lately, we're seeing real momentum here. Trading volumes are up. And many altcoins are actually outperforming Bitcoin right now. That's usually one of the first signs of altcoin season. Retail traders love this phase because the potential gains can be big. But of course, so are the risks. Here's how the cycle usually plays out. First, the top altcoins start moving. Then mid-caps join in. And finally, the tiny small caps pump hard. But those also crash the fastest. If you're trading altcoins, stick with the ones that have real liquidity and strong volume. Momentum is your friend in this part of the market, but don't hold bags too long. Be early, take profits, and don't overstay. Now let's not forget about stablecoins. They don't move like Bitcoin or Ethereum, but they're a huge part of the crypto market. USDT and USDC still dominate. They act as the backbone for trading and liquidity. Traders park profits in stablecoin. Institutions use them as bridges between fiat and crypto. And with new regulations coming in, things like stronger audits and reserve requirements, trust in stablecoins is only going to grow. For traders, that means more stability in the market. Also, keep an eye on stablecoin inflows. When a lot of stablecoins move onto exchanges, it often signals that traders are gearing up to buy risk assets. It's one of those under-the-radar signals that can give you an edge. Now let's zoom out a bit. Macro conditions are still driving a lot of this move. Interest rates matter. Lower rates usually mean more liquidity in the system. And crypto thrives on liquidity. Inflation cooling down is bullish because it makes rate cuts more likely. At the same time, a weaker dollar tends to push investors toward alternatives like crypto. Institutions are also playing a bigger role now. With regulations getting clearer, they're more comfortable stepping in. That mix of easier macro conditions plus institutional adoption is fueling optimism in this market. But let's be real for a moment. Crypto is still crypto. It's volatile. It moves fast, both ways. 10% swings are normal here. Throw leverage on top and things get dangerous very quickly. News events can hit at any moment. Regulation headlines, token unlocks, or even a big hack can send markets into freefall. That's why protecting your capital is number one. Use stop losses. Size your trades wisely. And don't risk too much on any single move. A lot of retail traders lose money, not because they're wrong, but because they're reckless. Patience and discipline are what keep you in the game. So where are the opportunities right now? For Bitcoin, watch that 116,000 breakout. If it clears and holds, the next leg higher could be strong. For Ethereum, keep an eye on 40,600. If Ethereum breaks above that level, it could spark a bigger move across the whole altcoin space. And for altcoins, stick to the ones with high volume and strong momentum. Avoid chasing pumps in illiquid coins. The smarter play is to ride momentum early, secure profits, and rotate into stablecoins to protect gains. Remember, in short-term trading, discipline beats luck every single time. So to wrap things up, Bitcoin is leading the market, but it's at a key resistance level. Ethereum is lagging a bit, but that could actually be a great opportunity. Altcoins are waking up and liquidity is flowing in. Stablecoins remain the backbone of the ecosystem. Macro conditions are adding fuel. But risks are always there. Volatility, regulations, and sudden news can hit fast. For short-term traders, the strategy is simple. Stay sharp. Trade with discipline. Protect your capital. And don't let greed take over. That's how you survive and thrive in crypto. Thanks for watching, and I'll see you in the next update.